Today, we saw the NASDAQ making new all-time highs, and we just learned that Tom Lee is no longer one of Wall Street's biggest bulls. We look at the Fear and Greed Index, we are sitting at 52, just slightly over neutral. Now, when we come over and look at how the indices fared across the board, the Dow was down 99 points. The NASDAQ was up 347 points. S&P 500 up 49 points, with the Russell 2000 being up 1 point. We look at advancing issues versus declining. We had 56.9% of issues advancing on the day. Then as we come over and look at the sectors across the board, communication services by far outpacing everything else. The laggard out there today was healthcare. Now, speaking of healthcare, if we come over and we look at UNH, yikes, United Healthcare absolutely getting destroyed once again, down 5.6%. And we had a lot of big moves in the markets. For instance, take a look at AVGO, up 6.63%. We take a look at Google, another massive day up 5.46%. However, Apple went up there, rang the bell, new all-time highs, and Apple today not able to close at those highs and actually started to close lower on the session. Is this a warning sign of what could be coming out here for tomorrow? And what I mean by that was today, we had the CPI data come out at 8:30 a.m. Quite often when we get the CPI report and the next day we get the PPI report, one of those reports will move the market up, the other one will move it down. Well, we know today, by far, the market was moving to the upside. You had to watch out, get out of the way, don't get ran over by the freight train like myself, which I had a red day in the markets today. Now, we look at the Now, before we talk about Tom Lee, we look at the CPI report, and it says CPI report overall core inflation rises by 0.3. Investors bet on Fed rate cut. If we actually come over and look at the Fed watch tool, we have 6 days until the next FOMC meeting. They are now betting there's a 94.9% chance the Fed will be cutting rates at the next FOMC meeting here in about 6 days. And that's part of what caused the market to rally up as much as it did today. However, we also saw the dollar moving up again. So with the Fed cutting rates, why is the dollar going up? And with the dollar going up, we also saw gold actually breaking out from this swing point. And we talked about this today on the live stream. And if you don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But we talked about this today. Once we saw gold was above the swing point, watch out. We are likely going to go ahead and run towards 27.89. We had quite the push out there today. Also, Bitcoin being able to regain the 100,000 price point. And we come over and look at this article. Fundstrat's Tom Lee is no longer one of Wall Street's biggest bulls, and here's why he is cautious. Now, what he does say is he expects Bitcoin to hit 250,000 next year. Let me know in the comment section down below. Do you agree with that statement or not? And when we scroll this article down a little bit, Tom Lee is still projecting the S&P 500 to hit 7,000 by mid 2025. So that means for the bulls, there still is a little bit more time, but look what he's calling for afterwards. He sees a major dip, and then by the year end, we get up to 6,600. Now, if that's going to be the case, how much of a retracement is this going to be? This to me looks very, very significant. From 7,000 down to about 6,500-ish, maybe a little bit lower. That would be a significant pullback, only to go back up to 6,600. If you're ultra bullish to market long term, be careful. There could be a little speed bump up ahead. And why this is more important than normally is we know Tom Lee is ultra bullish. He is always buy, never sell, always just want to be on the buy side of the market. Now, when we come over here and we look at the SPY real quick, the SPY, and again, I warned you guys about this in yesterday's video. If we come over and we just simply go ahead and put on the footprint charts, this is what I warned you guys about yesterday. Yesterday, we've had 2 consecutive days of increasing delta. And I said, by all means, this is normally where I would exit the trade or at minimum, get out near the prior candle's POC. What do we get today? We get another move on the way up. However, delta did decline a little bit today. So it'll be interesting. Tomorrow, do we go ahead and take out and make another new all-time high? And if so, is that delta going to be lower? If the delta is indeed going to be lower as the market pushes up towards all-time highs, that could be a warning sign that maybe we start to get a short-term pullback in this market. Now, when we look over here on the daily, you can see we got a little pullback, boom, right back up after essentially filling the gap. We look over here on the 4-hour chart, you can see we're right back up towards this high volume area. We basically got into this minus development area right here. We rejected on the way back up, but now we have another problem in the market. We have this gap that was essentially left behind from today. We look on the 30-minute chart, MACD is elevated above the 0 line, starting to get that roll effect. and we have that gaping gap below us. So do we come down and potentially hit gap support and then maybe go all the way down, potentially filling that gap? And who knows, maybe it's going to be caused by that PPI data coming out tomorrow morning. Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below. As we come over and look at the futures markets real quick, notice how close we got to making another new all-time high out here in the futures markets. What do? We essentially came right back up towards this high volume area. Now we're starting to get a little bit of a rejection down. Do we start working our way back down towards this next high volume area, slightly lower at about 6,063, kind of filling in this minus development area that we have down below us? Because as we look on the 30-minute profiles, notice we had quite the move up today. We have a P as in Paul shaped profile. And with that being said, value area high is going to be up here at 6,100.25. The point of control will be 6,097 and a quarter. And value area low will be 6,083.25. Now this afternoon, I was looking for the S&P to come down towards this level. And I closed out my S&P shorts slightly right before we got towards that zone. Now you look at that, you might say, well, Mike, this doesn't look like a minus development area. That's because we've traded back through it. We've kind of built it out a bit. Now with a P-shaped profile, I want to caution you guys, if we start breaking below value area low, that means we're likely going to explore the lower third of the range. And that would really bring us right back here towards the top of this lower minus development area, about 6,060 down to about 6,055. Somewhere in that range would make a lot of sense. Now tonight, when we open up, we will have an untested point of control slightly above us. So the question is, do we dip down early on and then come up, or do we simply go up and then potentially go down? Normally, when we get these outsized days in the markets, it'll end up with a D as in dog shape profile for tomorrow, meaning we probe a little bit higher, we probe a little bit lower, but we basically get stuck in a range. We don't have another trend day back to back like we saw out here today. Now, we come over and look at the QQQs. Yes, new all-time highs out here for the QQQs. Absolutely crushing it, destroying everything in the path. Look at Tesla today, another new all-time high. And on Tesla, it's quite impressive because if we look out here on the weekly chart, we zoom this back. This was an all-time high going all the way back to November of 2021. And now we have been able to take that level out. But look at the ascent on the way up. This is vertical straight up. At some point, we will get a correction. Will the correction come in January? Can we save it off till after the holiday season? Now, jumping back over and looking at the QQQs. What do we see? Well, I have no levels above us. We just keep grinding up. We've smashed all the ABC targets to the upside. We come over here, we start looking on the 4-hour chart. You can see we came into the middle of that channel, rejected back up. I thought we might come down towards the lower portion of that channel, but the market had other plans in store. You can see we have that minus development area right down here as well. If we start to get a pullback over the next couple of days, watch out for gap support and potentially the gap coming back from today and getting filled at about 520.58. We come over and look at the 30-minute profiles. Notice that large gap we had up today. We formed a P as in Paul shaped profile. And ideally, what I'd like to see is if we can break above value area high, aka all-time highs in this case, start coming back down, we can play the point of control, value area low, and then look for gap support and potentially the gap being filled. Now, if we do start to see bearish price action in the market tomorrow, look for this minus development area within the profile to come back and get filled. 526.82 down to about 525.85. Anything below that, I look for the low from today's real-time sessions, and then potentially all the way down for that gap to potentially come back and get filled. Now, we come over and look at the futures markets. Yes, another new all-time high. Right now, we're above the developing value area high. And notice right where we came down into this week when we had the pullback. We came right into the minus development area. We rejected out. Now, normally the first time into a minus development area, we'll reject out or we'll consolidate. In this case, we rejected out. We come back in here a second or third time. That's when we're going to open up some of those lower targets that we have to the downside. But in the meantime, what do we have up here that I'd want to focus on? We do have a minus development area within the profile right over here. And that's going to be somewhere in the ballpark of about 21,738, which is really not that far away. Then as we dive down and start looking at the daily profiles, this is the area I kept thinking this afternoon we were going to come back and test the minus development area from today's profile. Now, today's range was 414 and a quarter points, a massive range out here. So as I'm looking at this, what are we expecting? Well, value area high comes in at 21,817.75. Point of control coming at 21,794 and 3/4, with value area low being down here at 21,684.75. Now, one thing you should take note of as well, we have several minus development areas. And I want to warn you guys, even if we come down and test out some of these areas, that really does nothing to destroy the overall uptrend that the market is currently in. The market does not simply go up every single day, every single candle. There will be pullbacks along the way, and these are going to provide some great opportunities in my personal opinion. Now, if we come over and look at the Dow Jones was actually bucking the trend today. We had the Russell up, the NASDAQ up, but the Dow continued to trend lower. Yesterday, we came down to a 38% retracement, filling the gap, and now we continue to roll. Is the Dow giving us a heads up? Look at the MACD indicator. We have a bearish cross of the two lines elevated way above the zero line. Now, as we already have this Fibonacci level pulled up, the next stop would be right around the 50% level, about 440.58. The next level beyond that would be 438.02. We come over and we take a look at the small caps real quick, the Russell 2000. What do we see? Well, we saw this lower gap down here at about 234.48. We have not come back and tested. We also have a gap slightly below that as well. But, the Russell 2000 was at least able to close up for the day, even though we did not close at the highs of the session. The MACD lines are crossed to the downside, so we do want to be well aware of that at this moment. So tomorrow, it's going to be critical. As we look at this, after the PPI data comes out, are we going to see the Russell busting up or not? And I basically want to look at the line in the sand. If we're above value area low, which will come in at 237.89, if we're below that price point, I want to be looking for sell side trades. If we are above it, I want to focus on the point of control, value area high, and then maybe even making a run back from the high from a few days back, maybe towards the candle bodies at about 240.98. Now, if you guys want to learn how to track your drawdown when trading with prop firms using Tradeovate, make sure to watch this video right here.